So what are the differences between traders and investors? Well, right off the top, traders are usually short-term. They hold a position for a certain amount of time, which is usually significantly less than an investor. An investor is usually, I want to buy something and I want to hold it and I want it to appreciate for a year, 2 years, or more. For us, it's simpler, and for how I trade, I'm a trader because we just saw some action in a lot of names out there that were really awesome. We saw huge moves, hundreds of percent, something like Space, Virgin Galactic. That thing had a really, really great move and I made a lot of money off of it. But if I was an investor and I was still holding on to it, I'd actually be negative because it is now lower than the original price I entered in months ago. And so for me, investing doesn't really work because it's either too long of a horizon or I'm just giving back too much money and there's too much risk for the duration of what I'm holding. And I think for investing, you actually don't have sell rules. You're just saying, I'm gonna hold this and I don't care what it does, because you're hanging on to it saying, I just wanna own this stock. We are in the business of making money by trading stocks as they go up, and then we get out of them when they stop going up. And so I think for me, that is the biggest difference between a trader and an investor. And we wanna make sure that we capture our money and that we can pocket it and take that risk away from the market. So another way to look at it is, as an investor, maybe you're thinking that you can get 8 and 12 and maybe 15% on a good year from basically the average of the S&P and what it can return. But what we're trying to do is get those kind of returns almost on a daily basis or on a weekly basis. There are some trades where we can make hundreds of percent on one single stock, on one single trade in a matter of days or weeks. And so I ask, why would you want to be an investor trying to make 12% over the course of the year when, if you're a shorter term trader, you can capture that kind of percentage in a matter of days or weeks, and you can do that over and over and over, and then you can ratchet in those gains because you're out of the market and you're back in the market at just the right opportunities. Investment companies and advisors and financial people out there will tell you that it's impossible to time the market and that you're better off just buying and holding and investing for the long term because you can't figure out how to actually buy these things when it's right. Well, I'm here to disprove that. I think everyone here at Simpler believes the same thing. It is possible to time the market. We have our systems, we have our rules, and we have our methodology, and I think we can demonstrate time and time again that it is possible to catch trades at the right time and get out of them at the right time and make more money and more percent gains than just a long-term investing. So, if you don't think it's possible, I invite you to come take a look at us and see what we can do, and come learn a little bit at simplertrading.com.